Bank of Canada rate cut explained. What it means for the GTA housing market in 2026. If you have been watching the market lately, you have probably noticed the shift. The Bank of Canada just trimmed rates again, giving buyers a little breathing room, but also signaling that this might be the final cut for a while. So, what does that mean? It means the window to make your next real estate move, whether that's buying your first home, upgrading, downsizing, or adding an investment property, could be right now. The market's balancing out, listings are rising, and the serious buyers finally have a chance to negotiate without being caught in bidding wars. So, in this video, let's break down exactly what this new rate cut means for Toronto and the GTA, and how to position yourself before the market shifts again heading into 2026. Let's break down what's happening, how it's likely to shape prices, and what smart moves you can make right now. Hey everyone, welcome back to my channel. I am Tadlika Sehgal, your go-to real estate professional here in Greater Toronto area, helping buyers, sellers, investors make smart moves with confidence. No fluff, just real insights that actually matter in today's market. So first, the facts. The Bank of Canada has trimmed its policy rate to 2.25%. They said inflation has cooled around the 2% mark, which is right where they want it. But the economy is slowing, exports are weak, and the business investment is lagging. Basically, Canada's economy is catching its breath, and the Bank of Canada wants to keep that recovery alive without reining inflation. Now, the markets reacted instantly. The Canadian dollar actually strengthened because even though rates dropped, the bank's tone was move hawkish, meaning they don't plan to keep cutting. So, what we are seeing is the Bank of Canada trying to walk a tightrope, supporting growth without letting prices overheat again. For the GTA housing market, this sets up a pretty interesting scenario. Let's analyze the state of the GTA market. Right now, the GTA is in a mixed phase. According to the latest data from Toronto Real Estate Board and World of Wealth and Assets, a Toronto-based real estate data and analytics platform, September 2025 saw average home prices at around 1.06 million, down by 4% year over year. Benchmark prices at 960K, down by 5.5% again, and active listings up compared to last year, meaning buyers have more choice. At the same time, home sales actually hit an 8-month high, climbing almost 8.5% year over year, and yet condo sales, especially new builds, are struggling. In fact, Build reported only 28 new condos sold in the city of Toronto and 155 across the entire GTA in September 2025. That's about 90% below the 10-year average, the lowest level in decades. So you have got more resale activity picking up, but pre-construction hitting pause. It's a tale of two markets. Now, what the rate cut means for buyers, all right. Let's talk about what buyers should take from that. If you are buying in the next few months, today's rate cut gives you a bit of breathing room. Mortgage rates could ease slightly, especially variable rates or short-term fixed options. But because the BOC said this might be the last cut for a while, this could be your window of opportunity before things stabilize. In simple terms, you'll have more listings to choose from, less competition compared to the bidding wars of 2021, 2022, and slightly better affordability. If you're pre-approved now, just don't expect prices to crash. The GTA still faces a long-term supply shortage, especially in freehold houses. We likely see to mildly rising prices in 2026, maybe 2 to 4% growth depending on the sub-market. This was for the buyers. Now, what sellers should know? Sellers, this is where you need to be strategic. With this rate cut, you may see more buyers re-entering the market. That's a good news, but keep in mind, they're still cautious. budget sensitive and very value driven. If you're selling a detached or a semi in Peel, York or Halton, where supply is still tight, you'll probably hold firm on price. If you are in the Toronto core or selling a condo, you'll need to differentiate your property. Buyers have options now, so presentation, pricing and timing will make or break your sale. Think of it like this. 2026 won't reward the wait and see sellers. It'll reward the prepared and realistic ones. Talking about what's there for investors. Now, investors, let's be honest, the last 18 months haven't been easy. Higher carrying costs, tighter lending rules and rent controls have squeezed margins. This BOC cut won't flip that overnight, but it stabilizes the environment. That means if you are holding rental properties or thinking long term, you have now got a clearer outlook. Rental demand across the GTA remains strong, especially in transit accessible suburbs and mid-density areas. So focus on cash flow, balanced location fundamentals and long-term appreciation, not quick flips. And if you're a pre-construction investor, be selective. Some builders are offering aggressive incentives, but do your homework before committing. Looking ahead to 2026. So what's next? If the economy stays stable and inflation behaves, 2026 could be the GTA's transition year from volatility to balance. Expect more stable pricing, fewer big swings, steady sales volumes, especially in mid-range properties, and continued rental strength as immigration keeps demand high. The biggest wild card is still interest rates. If inflation ticks back up, BOC could pause for a long time. If growth weakens, maybe another small cut mid-year. Either way, the days of 1.5% mortgages are gone, but so are the days of 7%. We are entering a new normal, and that's okay. So to wrap it up, the Bank of Canada move is a reminder that real estate is cyclical, but opportunities never disappear. For buyers, this could be your moment to enter before rates plateau. For sellers, pricing right is your best play, and for the investors, think long term and stick with fundamentals. If you found this breakdown helpful, don't forget to like, subscribe, and drop a comment below. How do you think this Bank of Canada decision will affect GTA real estate? And if you want a deep dive into the 2026 GTA forecast, wait for my next video. Thanks for watching, and I'll see you in the next one.